All right. Good day, traders. I want to go through a trading recap of the trades that I took on the day after Thanksgiving, the 29th. Obviously, because it was a holiday, you would expect the markets to be on a slower pace. Volume was going to be reduced because a lot of people were on a break during Thanksgiving. The week is basically a little bit slower compared to other full trading weeks. So let's go through the trades that I took. But before we go through the trades, let's go ahead and review the criteria that we need the stocks to actually meet before we go ahead and take the trades. Obviously, we're taking the gap and ghost trading strategies. This strategy is not mine. I did not come up with this strategy. There are different types of gap and go trading strategies. The reason that people love trading gaps is because they are very volatile. But there are different ways people trade gap and go trades. Okay, so the first criteria that stock needs to meet is stock needs to gap up or down more than 3% at the opening of the trading day. And preferably, the reason that the gap is created, it's preferable if it's because of earnings or some significant news on the stock specifically. Obviously, avoid trading stocks that are gapping up or down because of acquisition, merger, or some kind of news regarding dividend. Because they do not have the volatility that you need or the trading range that you need. Upgrades and downgrade news are sometimes tradable. And then the daily average traded volume. We need to see at least like 2 million trading volume per day on stocks that we can take or that we can trade. And the reason for this is specific and I'm probably gonna go through it at some point, but there are videos why you want higher volume shares or volume tradable shares on stocks for you to actually go ahead and trade them as a day trading strategy. So the pre-market volume and or the traded volume, the volume that's traded in the first 5 minutes, you need to see it at least more than 300k, close to 500k. A million is much better. So if the gap is up, then wait for the move down in the direction of closing the gap in the first couple of minutes, which is an indication that the sellers are getting exhausted, and then the sellers are actually getting into the market, and then once you see an exhaustion on the sellers, then you take the reversal long. You do the reverse or the opposite on a gap down. You want to see the stock moving higher towards closing the gap, and then you take it short on a reversal. Do not short stocks of well-known companies because people love buying them at what they consider is a discount price. Stocks just like Apple, IBM, avoid those. And be careful about the spreads. Obviously, our risk unit on stock that meets all these criteria is $400, one risk unit. And if a stock is trending but it reverses like a little bit higher than we usually want it to, we take half risk and then we add or we increase our risk to a full risk unit at when we get a confirmation that it wants to go lower. I, on 29th, I took, I believe, 3 or 4 trades. November 29th. Okay, I took 4 trades on 3 stocks. So I took 2 trades on MSTR and 1 trade on SMCI and another 1 trade on NVIDIA. All right, let's go through the MSTR trade first. Let's maximize the chart. Okay, so MSTR gapped up on the 29th. Obviously, the closing price on the 27th, the day before Thanksgiving, was around $388. The next morning, the day after, or the day after Thanksgiving, it opened at around what 403. So it gapped up about 3.9%. If you look here, you're gonna see the gap. Look at where my mouse is going around. Look at where the crosshair actually meets. So look at here for the volume. So volume 219,000 the first 1 minute candle. On the second 1 minute candle, another 163. So about 300, more than 300k. The At the open, the stock had gapped up about 3.96%. Obviously, volume was on a slower pace because this is the day after Thanksgiving. So the first trade that I took was around here. The first 30-minute candle, I took 200 shares at $406. I got in at 400, got filled at 406. My trigger price was 406.51 cents. I think I jumped the gun a little bit, so I got filled at 406. Then my stop loss, the first stop loss was under 403, somewhere around this area. So obviously this had not happened at that point. So this is what I was looking at when I first got in. Trigger, stop loss somewhere around here. This is the point of no return. If you got here, I would expect it to go lower. That's why I took this. All right, let's go back. But then the stock came back, moved below my entry. Obviously, if I had a stop loss somewhere around here, I would have survived, but that was going to be too much of way too much above my risk unit. So 406.50, 403, about $3. Stop loss, which is about $300. So one risk unit almost. I got out of the trade with a loss. My first trade was a losing trade. On the second trade, I actually saw it get support right here because it made a higher low. I shouldn't have gotten out, obviously, if I was just looking at the pattern or at the trend, but still, I have to stick with my trading rules. The second trade, the same entry, 406.50. Got in right here, another 200 shares. It came back, found support, higher low, and then it started moving higher. MSTR moved higher, went above the highs of the opening, and then I took my partial somewhere around here at 408.46, about 2.5 points, less than a little bit less than my 3.1 to 1 risk to reward ratio. But then I also took a second partial at 409, which is about 50 cents above my 1 to 1 risk to reward ratio. So obviously I probably had like 24 shares. And then where did I close the trade? Where did I get out of the rest of my size? 200 shares. Oh, I think I got off. Okay, 175. The rest 26 shares. I closed the trade right here. But look at it. It found support right here, moved higher. This is something that I'm struggling with. Obviously, letting my runners go a little bit higher. Yeah, I'm working on this. Okay, this was the first trade. The first two trades that I took on MSTR. The next one was Nvidia. NVDA. Let's see what happened on NVDA. So stock gapped up about 1% for the day. Huh. Okay, so I guess NVDA did not meet the requirement, but I got into the trade, but it had pretty good volume. 1% on NVDA is not bad. Let's see what the market was doing that day. Market, okay, 0.919%. This is the 24th. No. So Friday, 29 November 2024. So NVDA had a relative strength. That's why I took it. But it does not qualify as a gap and go trade. So NVDA relative strength about 1% higher. So moved down. It was basically going up and down within a range. It came down, went lower, and then I took it higher, like somewhere around here at 100, at the price of $136.90, $136.90. I got filled in at 136.99. NVDA moved a little bit lower. This was going to be my stop loss, about 60-70 cents stop loss. Yeah, about 60-70 cents stop loss. NVDA made a higher low, struggled to break out. Basically, this was kind of a breakout trade, but once he went ahead and broken out, he went pretty good higher. So out 3/4 of the trade at 137.67, 136.90, 10 cents here, 67, about 70-80 cents. And then got out of the rest of the trade at 138.07. But look at what NVDA did. I left about $1, 136.23, What? 138.22. Okay. I was like, did I leave $3 on the table? No, it was about $1 that I left on the table. Still struggling with this, but working on it. Another winning trade. So two winning trades, one losing trade so far. Both long direction. Let's see. The third trade that I took was SMCI. Let's go to the open at 9:30. Maximize this chart right here for SMCI. Okay, what did SMCI do? SMCI gapped about 7% to the downside at open. Volume 2.25 million shares traded in the first 1 minute candle. SMCI, what do we need it to do? We needed to go to like in the direction of closing the gap. That's exactly what it did. Since it gapped down, we want to see it move towards the direction of closing the gap. So it did exactly that. Went down, moved it. This look at this green candle, the second 1 minute green candle right here. Went up higher, reversed. So took it on the first reversal under $32.70. On like obviously hindsight is 2020. I think my correct entry should have been around $32.50. But I got in under the low of this third 1 minute red candle right here. Took what? How many shares did I take? Let's see. I take 501 shares. I took 501 shares. So what was my stop loss? 32.70. Stop loss around 33, 38, about 40 cents stop loss. 5 times 4 is 200 shares, $200. So about half risk unit. 32.70, 33.40, about 70 cents. So 7 times 5 is 350, so about a full risk unit. I think I should have taken a little bit lower size, but yeah. So, and then what happened? 32.22, about 50 cents. A little bit less than the 1-to-1 risk to reward ratio, but I took my partial because it was getting to the lows and I didn't want it to I didn't want to go through a pullback. But if I had actually went through the pullback, I would have gotten rewarded even better because I would have taken about 60 cents. 31.12. Wow, 31.57. About 90 cents. So hypothetically, I should have waited for this retracement or for this pullback and then taken my partial somewhere around here. But I took a partial. It doesn't hurt. It doesn't hurt to get paid or to pay yourself when the market actually gives you money. So that's what I did. I went ahead, took my money here. Yeah, I think I got out. Yeah, I closed the whole thing at 31.66. But look at it, came down the first 1 hour for gap and go trades. What? 3 out of 4, so 75% win ratio. Not bad. Not bad for a day after Thanksgiving. Alright, thanks for watching my video. If you like what you see here, please like and subscribe so you don't miss any new videos that I put out. And I appreciate you guys watching my videos. I'm trying to learn how to trade. I'm trying to be profitable, and I appreciate your support. Thank you.